Good morning, traders. It's James Harte here, and welcome to this Orbex Market Insights update for Monday, the 30th of September for the equity indices, where we'll be focusing on the UK100 and the SPX500. So in terms of fundamentals, it's been an interesting time for equities markets on both sides of the pond recently. In the US, the main driver has been the shift in US Fed rate hike expectations. The SPX was well bid heading into the September FOMC meeting, with traders looking for the Fed to cut rates and signal further easing to come. While the Fed did cut rates by the expected 0.25%, we saw a higher number of policymakers opposed to the move than we've seen before, and as a result, pricing for a further rate cut has been reduced, and this has been stalling the move higher in the SPX. Looking ahead this week then, in terms of data, the key print for the US is the PMI sets that we have coming in across the week. And these will be the key data to watch. If we see negative prints in these readings, this could boost expectations for further easing from the Fed, supporting equities. In the UK then, Brexit remains the name of the game. The risks of a no-deal Brexit happening have lessened recently. However, there has been a shift in tone from the BOE, which is important to note. Last week, MPC member Saunders warned that the Bank of England could be forced to cut rates even if the UK can secure a Brexit deal. And in a further dovish shift, he also warned that the Bank of England might be forced to act ahead of Brexit if Article 50 is extended again in order to protect the economy from the negative impact of extended uncertainty. In terms of data, then the key data this week for the UK will be the September PMI readings, which will give an insight into how the economy is holding up 1 month out from the scheduled Brexit date, which is still October 31st at the moment. Okay, so let's take a look at some technicals then. And please remember that all opinions shared here are educational only and do not constitute investment advice. And also be aware that when trading, losses can exceed profits. So, starting with the SPX500 then on the daily chart, and you can see that price recently tested the 3021.59 level, which has held as resistance for now, creating a potential double top. You can also note the bearish divergence that we're seeing here on the RSI indicator, flagging the risk of a potential move lower. Now, so far, the retracement has been fairly shallow. You can see that we're currently retesting those broken highs around 29.40.33, which are holding for now. So in line with the longer term trend, which is higher, while we hold above this 29.40.33 level, it seems as though we are likely to get a further push to the upside, looking for the SPX to move back above those highs to print new fresh all-time highs. If we drop down to the H4 chart then, and you can see that this move lower appears to be fairly corrective now. Aside from this large bearish candle here, we haven't had any heavy sell-offs rather, and prices remained well supported with lots of dip buying in the move. So again, while we hold above this 29.40.33 level, focus is on a further push to the upside, and that view only changes if we break down below that level. Let's move over to the UK100 then, again starting on the daily chart. And you can see here that price recently broke out above the 73.69.9 level. However, as yet, we haven't retested that broken bullish trend line from the 2018 lows. Though, while we do hold above this 73.69.9 level, focus is on continued upside. However, traders should be aware of this 74.67.7 level, because what we could see shaping up here is actually quite a large, let me just zoom out for a second, large head and shoulders pattern. You can see we have the left shoulder here, the head here, and potentially a right shoulder in and around this level, maybe running up as high as a retest of that broken bullish trend line. If we put in another resistance level there, that figure is 75.24.3. So somewhere between 74.67.7 and 75.24.3. This is an area to watch and to be careful of, because we could see some resistance here, and this might pave the way for a larger head and shoulders move, which of course would imply that we are going to see a longer term reversal lower. So if we drop down to the H4 charts then, again, you can see that price is currently consolidating, having recently broke out above that 73.69.9 level. So in terms of the short term outlook then, this remains fairly bullish for the UK100 while we remain above this 73.69.9 level. Any retest of this level could offer bulls the opportunity to reload longs, targeting a move up to this 74.67.7 level next. Okay, so these are the levels I'm looking at then for the UK100 and the SPX500 today and across the rest of the week. Please make sure to stay tuned into the blog over the week, where we will update you each day with all important trading market developments, doing our best as always to serve traders responsibly. Okay, thank you for joining me. Goodbye.